Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades, and I hope you're having a good week so far. We are fresh out of our live event in Fort Myers, Florida, and we had an incredible time with our VIP members, and we hope to do it again sometime soon. Right now, the Dow is still trudging along to the upside, but take a look. This is a drop in volume right there. As I magnify that, you can see that the drop in volume tells us that the buyers are getting tired. Now, if you're following along with my trading checklist, you'll know that volume is number 2 on the list right here. We look at the type of candle, we look at volume as a leading indicator, not as a lagging indicator. And so what I go through each and every week is basically a checklist that follows the signals to determine who is in control of the market, whether it be the bulls or the bears. Now, with that said, going further into this analysis, you could see that I still have my upside target on the diamonds at 385.23, but I think there is a chance that we may not get to that next week. Instead, we could drop below that key support level, which is a role reversal support. This line right here acted as resistance here, and then it broke out slightly, and it looks as though it's holding as support. So next week we have to keep an eye on that, because if that support level breaks, it then reverts back to resistance. So again, I'm not quite sure we're going to hit that upside target, but we have to see whether or not we hold that support. If we do not hold the support, then I'll be announcing that on Wednesday during the midweek report, and we'll make a forecast to the downside. So this upside target is in question. So for those of you who are long, I would make sure you trail your stops up, protect any profits that you might have, and be ready for a pivot lower. Now, looking at IWM, you can see here that we did hit my upside and my downside target from last week. It looks as though we're going to go lower here as well. You can see the drop in volume is telling us that there's lack of activity on the upside, or less motivation to the upside. So I'm going down on IWM, very close to what I had from the last target down here. That downside target for next week on IWM is 191.58. Follow my trading checklist and you'll see that the oscillators are hinging lower here, leading us to believe that the sellers are taking over. This now becomes a key resistance at these levels. This too is a role reversal. You see how back here it was support, it broke out below support here, turned to resistance here, and then it looks as though resistance is holding. So that role reversal is very important when you're trading, especially for the swing traders out there, because if you fight that shift in the supply and demand of that particular stock, you could wind up getting hurt if you're fighting those signals. So be careful. Again, my downside target on IWM is going to be right there at 191.58. Moving right along to the Qs. This was a 4-part forecast that looks like it's shaping up very nicely to what we're expecting. I'm keeping that downside target on the Qs right there at 409.53. Remember, my upside target was hit. That was part 1. I said that we would get a drop in volume. That was part 2. I said that the CCI would start to hinge lower and move towards a sell signal. That has happened as forecast 3, as we see a very clear sell signal right there. And the only part left to hit our 4-part target is that downside target right there, which again is 409.53. That is still in place to the downside. Now, looking at the spiders, SPY, we did hit my upside target, and last Wednesday I said this is the only time that I would put a forecast out. It didn't hit it by Friday, but I'm keeping that downside target right here at 479.14 on SPY. You could see we're very, very close to a sell signal on the CCI, which is the blue line there. Once it crosses below the red, or the 100 mark on that scale, that is what we label as a sell signal. So there's a lot of algorithms out there and a lot of swing traders that follow that. So I think that will add to the sell side as we look into the early stages of next week. So downside target on the spiders is 479.14. That brings us to the VIX. We hit my upside target right there that I said at 1397. Ultimately, I have a higher target up here at 1811. This gives us a little bit of a conflict, though, with the VIX. So we'll have to see what happens on Monday. Monday's a key day for the VIX. I think we could pull back very slightly on the VIX on Monday and or Tuesday, and then I think we're going right back up. I'm keeping that high target at 1410. And so this is a two-parter on the VIX. We might just hit that right on Monday and then start to head up. Now remember, for the most part, the VIX is inversely related to the S&P. So that could mean a higher opening on the S&P on Monday, ultimately to trade lower, which would cause the VIX to drop initially and then rally higher. So I'm keeping that upside target on the VIX at 1411 right there. Now, again, remember, this 7-point trading checklist is something that I give out to the public. It's a guide. It's not necessarily, the gospel for trading. But I will tell you that if you follow the trading checklist, it's going to help you increase the probability of making money because you're not going on what you're hearing on the financial networks. You're going by what the charts are telling you. And that's how we more or less weigh the evidence. Now, getting into the geopolitical news, you can see here, this is from Credit News. Delinquencies are spiking, and as a result, banks are granting fewer lines of credit. Now, this is coming from one of the Fed analysts, and if you're following along what's happening with the credit and the loans outstanding, it's getting pretty ominous out there because if you look at what's happening with credit card interest rates alone, look at this, they're above 20%. And what's happening is more and more Americans are living off of their credit cards. And you can see that credit card debt has surpassed $1 trillion. And the personal interest payments on that has crossed $500 billion. This is absolutely unprecedented. So you have to watch this because eventually this is all going to break. It has to break. We know that we're watching the markets go higher, but this is exactly how it was back in 2007, just prior to the crash of 2008. Remember, the crash of 2008 brought the markets down 50% in 1 year, 50%. If that happens again, and I think it very well could, that's going to bring us right back to the March 2020 lows, which is what I've been forecasting for a long while now. I have taken long positions periodically. I put out trade notifications to our members on the long sides, stocks like Alcoa and Kellogg and some of the other ones out there we've done well with. But this is eventually going to break, and I'm putting the warning out to all investors that you have to keep an eye on support levels as they break. Once the support levels break, sell stops start to come into the market, and then things get pretty crazy from there. Now, let's talk a little bit about the supply chain. This recently came out showing that coming from the Panama Canal, going from south to north, the number of container ships have dropped quite dramatically. Again, this is unprecedented. This is what we saw back in the COVID crash of 2020. And so that will most likely affect the supply chain. And in fact, one of our members, Rich, I'm going to give Rich a shout out here, sent me a picture from his Costco store nearby him. And this is very rare that you see Costco showing such a lack of inventory on the shelves here. But that is what's happening. That's real life boots on the ground. Thank you so much, Rich, for sharing that with us. But the story continues as we look at what's happening. This is a crisis on the southern border. This is being announced mere hours ago, where 700,000 truckers are estimated to participate in a convoy that could very well affect the supply chain with cargo coming through these containers that are coming from the ports and to the end-line consumers. This is something that is a peaceful protest right now. We'll see whether or not it stays peaceful. I hope it does. But there is an absolute crisis on the border, and I do believe eventually this too will affect the markets. This recently came out. I'm going to show a quick video of what's happening here. There's a known terrorist that has been identified here making claims at the southern border that you will know who I am. He's saying you will know who I am. This is being filmed right at the southern border. Take a listen. So what baffles me, and like you, a lot of Americans, why is our government allowing these people to literally just walk over the border unchecked, unvetted, and known as terrorists? They are in our country, and they are not here because they're tired, hungry, and poor. They are here to attack us. That's a fact. Now, some of you may not know, but many of you do know. I created the CB Combat Warfare Program for the U.S. Navy, and part of our training involved identifying terrorist camps and how to establish anti-terrorist missions. Now, again, this is something that you need to pay very close attention to because it is serious, and a lot of investors especially are ignoring this. Now, if you go back to the VIX, I'm going to take a step back and show you what my charts look like longer term. I have this target eventually at $18.11, but I have not forgotten about the longer term target that I have here set at 41.88. I've never removed that. And if you look at the VIX on the monthly scale, you can see we are starting to form a pivot on the VIX right here. You see that? And you can see on the monthly, again, we have a buy signal on that CCI. The stochastic is showing a positive divergence, but that buy signal on the CCI is what I'm relying on, and that is a big influence on the general markets because if you know anything about the VIX is a fear index. As fear creeps into the market, you can see there's many things affecting us right now that could instill more fear in the investor community. The fear index, as it goes up, generally pushes prices down as fear creeps into the market. I know that sounds like doom and gloom here, but folks, I'm doing my very best to shout from the rooftops to help every one of our members and people from the general public. Please use your own judgment. Make sure you're trading in moderation and be sure to stay in touch with stickytrades.com. We have lots of information and good education out there for you that you could tap into. So with that, have a great weekend, and we'll talk to you on the next report. So long.
This is something that will stay with you for the rest of your life because, like I said, stock market is not going to go out of business. You just have to learn how to take charge of that money within the market and not allow the market to take money from you.
Coming to these events, I get to hear a lot of different experiences, plus make a lot of friends that have the same similar common things that we have.
Learn how not to lose money. Stop loss orders. It takes away the emotions. If you can take away the emotions, you become a better trader.